Firstly, okay, how does this financial system manifest itself? The blowing up, is it going to end in a bang, which is what everybody thinks? The dollar goes to zero and everybody blows up and all the banks blow up. That's not going to happen. And the reason being is they've discovered a magic trick, which is you keep printing money and you hide it. But what that actually does is lower the value of your purchasing power. So if you look at it in different terms, your same salary buys less of a share of the S&P 500 bar of gold or a share of a Bitcoin than it used to before they started printing money. And every time they print money, these things keep accelerating away. What are assets? Assets are your future consumption. You store your money in an asset, and then later you sell it to allow you to spend it. That's what assets are. So you're being able to buy less future consumption, i.e. you're poorer in the future. And so that creates a big problem. The other thing is the governments have kind of bankrupt by having spent so much money trying to bail out the economy so many times that they're going to tax you more. So therefore your income's going to be less, your future's going to be less. This is not good. And they've got the risk of banks blowing up and other things, which means you could lose all of your capital. So you've got a sinking ship. It's probably sinking slowly, but like the frog in the boiling water, you don't really realize it, and most people don't really understand it. They keep looking for the wrong thing, the dollar to go to zero or something to happen, and they don't realize they're already getting screwed. But there's the life raft, which is Bitcoin. Because Bitcoin, with its restricted supply and its outside of the banking system, no leverage, basically, or over-collateralized, with the recorded ownership, is a way of putting your assets into something that over time should do extremely well. Even if it's just because the central banks keep debasing the currency, Bitcoin will go up just by that amount. But as we know, it also gives you a call option on the future. So what you've got is an asset class that's currently, just Bitcoin alone, is currently just under $1 trillion today. If we look at the size of the global equity markets, global bond markets, global real estate markets, they're all between 100 and $200 trillion. So what could Bitcoin be worth if that life raft takes us to dry land and gives you a chance? It's probably worth $100 trillion. So it's got 100x to go from here. Nobody watching this or listening to this will ever see an asset in their lives go up 100x that's already gone up 2 million%. So it's the opportunity of everybody's lifetime to actually create wealth, and it protects your wealth for the factors such as, excessive taxation, although you can't really get out of the tax system, but it gives you optionality. It also gets you out of this currency debasement cycle that we're in. Also, we're in a very difficult world. Part of my exponential age thesis is the rise of technology such as AI, robotics, and all of these things. These are all going to be taking jobs away and opportunities. Salaries can't go up over time because you're competing with the machines. And if not, you're competing with somebody else elsewhere in the world. And we've got the baby boomers in the workforce at the same time as their kids, which has never happened before. So there is no salary going up. So the only way of generating wealth is to make the right investment decision, or be lucky enough to start a business, or be in a business that pays more money. So that's the magnitude of the opportunity of this life raft and what it can do for people.
Yeah, and I've heard you refer to it as pristine collateral, and I think that's a really beautiful way of putting it. And I know you've done lots of charts showing how Bitcoin's outperformed pretty much every other asset class, just to kind of quantify the scale of what we're talking about here. So as you just alluded to, this kind of idea of exponential assets, and Bitcoin really is a foundation for a new financial system. So could you talk us through what you mean by exponential assets and some of the kind of key concepts? So, I know you refer to things like Metcalfe's law, the Lindy effect. Could you talk us through how those play out in the context of exponential assets?
So it really started, without going back to railways and stuff, but really the mobile phone revolution was the first of these mega network effect businesses. So what is a network effect? Well, a network effect is if there's one mobile phone in the world, it's worth nothing. If there's two, it's worth something if you want to speak to that person. If everybody in the world is connected, it's one of the most valuable things you could possibly have. And then if you look at what happens with networks, once they become valuable because you've connected people, you can build other things on top of them. So the value of the network grows exponentially. And this was coined into something called Metcalfe's law. And Metcalfe's law suggests that you value a network based on not only the number of nodes, people on the network, but the number of connections they have with each other. Because the number of possibilities, much like we talk about the call option in Bitcoin, it's basically the same thing. What it's saying is the more people are connected, the more likely it is to create value. So what happened is this started with the internet on a dramatic scale, of a scale that humans couldn't imagine. And suddenly all these businesses became crazy valued. We didn't really understand how to value stuff. Why did Amazon trade all the way from like 99 to 2012 at a P of 800? Because it was not a normal stock, it was a network effect stock, because it created a gigantic network. And that whole network effect leads to something called exponentiality. So there's a number of things in a network as well. You talk about the Lindy effects and S-curves, is basically a network that comes under attack and survives is generally proven to be more robust, which is the Lindy effect, and the higher probability it has of thriving because it's proven its robustness. And networks are distributed in nature generally, so they tend to be quite robust. Then you have something called S-curves. So then that's the moment in time where these big questions get asked. Like in Bitcoin, it was when the forking happened or when Mt. Gox went under. Is this network going to survive or not? Or we've kind of run out of use case for the time being of the network. And we've kind of seen that with Facebook recently. It's kind of like, it's kind of run out of where it's going with Facebook, WhatsApp, and Instagram. Although you and I know that it's actually going somewhere different. And it's starting to be reflected in the shares. But those things all come together. And as the adoption grows, the prices go exponential, which means that to anybody else, it looks like a bubble. And nobody understands it. It's like, this is crazy. And you can see this all over social media. But when you put it into a log chart, it's actually a very smooth progression. And that is how you have to look at these exponential assets. They're not like anything else. What's so good about them is they offer this upside that is beyond comprehension. This is why Bitcoin's gone up 2 million%. Nothing else has ever done that before. So we have a very skewed risk reward. Now, Bitcoin could go to zero every year, let's say. But on average, it goes up 213%. I mean, that's an extraordinary risk reward every single year. And that's the power of exponentiality. These exponential assets also tend to be very volatile. Look at the tech stocks. They've always been volatile because it's all about network adoption. Everything else is kind of noise in the middle. Once you understand network adoption is everything, and we talked about it earlier on, about this 113% growth rate, you kind of understand, and you can apply that to everything in the crypto space and in the metaverse space. You're just looking for adoption. Anybody who's trying to value stuff on cash flows or anything else is barking up the wrong tree. It's how many people are joining the network, are they using the network, and how many other applications are being built on that network. And that's what makes, whether it's Ethereum, which is a phenomenal network effect, or Minecraft, these are so valuable because everything that's being built on these networks.
Yeah, and obviously with the former, I know you've highlighted the thing that's different here is that everybody, in theory, can now access that exponentiality as a shareholder in a way, right? So
that's a really crucial point. So in the past, Facebook had shareholders and users. The users got the benefit of the network. The shareholders got the benefit of Metcalfe's law, the value of the network. And as a user, you didn't get that at all, really. Then Bitcoin comes along, and it's basically the world's best behavioral incentive program. It's like the best thing behavioral economics could have ever devised as a human experiment. We're going to create a network of money. And the more people you bring into the network, the more it goes up in value. And we're going to build applications on it. So it's not a Ponzi scheme. It's actually something you can build on. This is like perfect for humans, that we're going to go crazy on this stuff because we're all incentivized. Now we're all network users and owners at the same time. It's like every single person on Facebook being given Facebook shares. It's amazing.
Yeah, and to be honest with you, I'm always blown away by economists that aren't excited by this, and not just Bitcoin, but
they don't get it because they're mean reversionists. Because our careers, even as macro guys, is it's a bubble, let's short it, we'll make money. The business cycle's overheated, it's going to come down, bonds are oversold, all of these things are mean reversion. And that's the linear world.